Is it possible for a share price to be manipulated? It's not even a question that's open for debate. In the last week, we saw in America that Robinhood was accused of manipulating meme stocks. If you look at the way options and derivatives work, it's very easy for those options traders that often close out the book at the end of the day, sometimes even 2 or 3 days later, but normally in the opening trade of the following day or the closing trade of the day, they reconcile their paper books, their paper trades that happened in their own book. Other brokers go straight to market, but in split seconds, and you don't get to choose the price. So Easy Equities, which is a fantastic business in the sense of democratizing the small investor, they operate very similar to Robinhood in the sense that if they wanted to, and I'm not saying that they are, they could have arrangements with certain companies. And again, let me just use an example that we understand, and that's Capitec. Capitec does have an association with Easy Equities, that is a known, and we can discuss that in another video. But let's assume that there's a price differential of 50 or 100 Rand a share. Let's say it's 100 Rand a share. But let's say the difference between the offer price, the person willing to sell, and the bid price is 100 Rand. You come to Easy Equities. When you look at your shares, by default, there's a 15-minute price difference. You don't know what price you're going to pay for the share. You don't see any bid offers. You certainly don't see the number of levels between the different offers and the different bids. But the algo and the computer program sees all of that, understands exactly how to trade it. So because shares on the JSE trade in 1 cent increments, 100 Rand spread gives you basically 5 decimal places to play with. Again, I'm not saying that this has been done, but it's quite possible and very easy to write the computer program to do it. So you want to buy, let's say you just wanted to buy 10 shares. Suddenly, when you push your trigger, your purchase is exercised 1 cent higher than the current. So say that price was 2,100 Rand. 2,100 Rand and 1 cent the price gets triggered at, and you've made your purchase. Within a split second, a microsecond, a fraction of a second. So the person willing to sell was 100 Rand higher, was willing to sell at 2,200. And now a sell comes in 1 cent lower, 2,199 Rand 99 cents. And that share price last trade is 2,199 Rand 99 cents. Suddenly the market sees, gee, the share price has gone up, and real buyers may come in and go eat into that 2,200, pushing the price again. The next person comes on a platform like Easy Equities, and again, this is just an example, and now the price is 50 Rand differential. But the last trade, because of market activity, was, let's say, 2,220 Rand. And the next offer is 2,270 Rand. You put in your price, you get the 1 cent higher than the current price, and it sells up. What happens in the book of the broker that's doing that trade? In this example, we're using Easy Equities, but it could be anybody, Robinhood for argument's sake. On the first transaction, they brought and they sold. They made the 99 Rand 98 cents, the difference between the buy and the sell, and you holding your buy rate at 99 Rand 98 cents lower. This happened in microseconds, and the share price has gone artificially higher. Has it been manipulated? Arguably it has. Where the price was 50 Rand difference, the broker made 49 Rand 98 cents off the trade. The individual that's holding the share, and maybe a share plus a fraction, is holding it at a price that is 98 Rand 98 cents at least lower. Sometimes with a fraction it might be a little bit more, but anyway, the point is 150 Rand, just shy of that, has been made by a company like Easy Equities, by that broker, and the individual is holding shares that truly traded at market, because they truly were in market, but the trade was so fast, split seconds, you would not have known or been any wiser. If you look at the history, you would have seen that there was a trade for 5 shares or 1 share or whatever you ended up purchasing. Is that illegal? Some would argue no, because it actually went through the market and that wasn't manipulation. It's simply an algo making additional money to the free brokerage or very low cost brokerage that is offered. But now in the case of Robinhood can offer free brokerage. Why do they offer free brokerage? Well, it's because they make money off this lightning fast trading. But there's other ways to make money too. You could have a relationship with companies or a company director who has a whole board of executives for that matter, but it may just be a handful of executive directors that decide, okay, we'll have a relationship with you. We're very interested in helping you help us to make sure that our share price is elevated. Is that illegal? I would argue that most definitely that is. Where the criminality comes in is if directors are rewarded by a SARS scheme, and by SARS I don't mean the tax authorities, I mean share appreciation rights scheme. That is where they're paid big bonuses for the share price to go up. Why would a director be really interested in the share price unless they were going out to go and do acquisitions? A director, an executive team should be interested in running their business and making sure that they deliver solid profits and the share price moves up because they're running a great business. The share price shouldn't move up artificially, and directors shouldn't walk away with hundreds of millions of rands in bonuses because of share appreciation rights, or receive additional shares that eventually vest at far higher rates because the share price has been manipulated. In my mind, and I'm sure many will agree with me, it's criminal. And surely you're saying, well, surely that can't happen on the JSE. Well, why not? What's happened is, in a normal situation where there would have just been one transaction, there's now 3 transactions, and the JSE make their little margin, a fractional percentage, on every little leg, every little bit of transaction that happens. Ironically, the more volume that the Johannesburg Stock Exchange has, or any exchange for that matter, the more confident external investors feel about the market being real, because there's so much trade. How can a share be manipulated when there's so much volume going through the market? Well, ironically, when a lot of that volume is resulted with derivatives or artificial trades or things like this happening due to algorithms trading at fractions of a second, far quicker than the naked eye, it does make you wonder. Obviously, the Nasdaq and other markets operate in much the same way, and the exact same thing happens there. I'm using a local example. So when people laugh at me when I say that certain shares are clearly being manipulated and it's ludicrous, you need to realize that I've just shared one example with you. When it comes to derivatives, when people are running their own book and they do transactions in the closing trade of the day, and you see huge differences in the closing trade or the next morning in the opening morning trade, and you are restricted from trading at those particular prices, or the actual book of the derivatives trader has such artificially wide spreads that don't comprehend with reality. These are all question marks that you should be raising. So unfortunately, the truth is that financial services and the way financial services companies make money isn't always the fee that's disclosed. There are other avenues in terms of making money. And with computer technology, with how rapidly things happen, this becomes very interesting. If you've never read Flash Boys, it's probably aged a little bit now, but it's still a very entertaining book. So do yourself a favor and read Flash Boys. Flash Boys is written by Michael Lewis. He's originally wrote Liar's Poker. If you've never read Liar's Poker, do yourself a favor and read that as well. You may be familiar with the movies The Big Short, which features Michael Burry and the housing crisis, as well as the movie Moneyball. Both of those were based off the books by Michael Lewis. Also excellent books to read. So do yourself a favor, if you've never read any of those books, do that and maybe start with Flash Boys. But this rapid movement in the market, which we don't see with our naked eye, you need to accept when you're trading and when you're a price taker. When you're not saying, I'm buying at XYZ price, you're going to be given the price and you're just going to have to accept it. And sometimes, even when you do specify a price, there's split-second activity that you're unaware of that's taking that price away from you for whatever reason, or giving you the lower price and benefiting from an uptick for reasons that you might be unaware of. But it's happening. You're very sure it's happening. And there are naysayers that say, listen, the share price can't be manipulated. Those naysayers just simply don't understand how markets operate. And I don't mean that to be arrogant. I just mean the evidence is there. It's clear. If you've been watching different shares in different sectors for long enough, especially on the JSE, you get to see what are realistic patterns. And even those of you that have been technical traders and trade charts for a while, you're able to see patterns that make sense. And many technical analysts will tell you of certain shares, Clicks, Capitec, shares that their trading patterns just don't make a lot of sense. And you can't really say, oh, that's a clear head and shoulders, or that's a clear descending flag formation, because the share price doesn't always follow what you expect it to do. And there's normally a reason for that. And that reason is often share price manipulation. So think about that when you go to market. Do you want to be with the share price manipulators, or do you want to fight against it, or do you just want to stay away? Because those are the options that you have. But for me, I feel that this type of market manipulation needs to be exposed for what it is, and that is really criminal. Money's been stolen from clients that isn't clearly disclosed to them. Whether it be those clients that are shareholders within the institution that's paying big bonuses to their directors, or otherwise. Thanks for watching. Please keep on watching, subscribe, and I'll upload the next video.